I'm Rasika, the editor at payments.com, and I'm happy to be joined by Nick Thomas, the Chief Product Officer at Finicity, to discuss data access. Hello, Nick.
Hello, Rasika. How are you?
I'm good. How are you doing? So to start a conversation, we've seen that data aggregation has a storied history and access is often a sticky subject. Give us a little brief rundown of this history and explaining why this is so important for financial institutions.
Well, that's a very big question because data aggregation has really been around since 1977 and even before, where the problem was being solved by a combination of standards with the OFX standard, as well as screen scraping. That's about the same time or not long after where Yodlee introduced the screen scraping model into the industry. And so the combination of data access through structured data and data access through screen scraping has been around for a long time. And for many years, it kind of sat in this zone of almost like the banks. It was a don't ask, don't tell policy relative to data aggregation. Regulation, I mean, still regulation is not 100% there, but there's a lot of progress there, which I'm sure we'll talk a little bit about. But it's been in this place where consumers have wanted that data. They have begged for that data and begged for that to be consistent and easy to get access to, which really drove the inclusion of Section 1033 in Dodd-Frank. Mm-hmm. And so Dodd-Frank really highlighted the need for consumers to get access to their data from the financial institutions. And that kind of, it went from kind of this gray zone of well, we support Quicken and QuickBooks as a bank, but don't ever use your credentials. But we support Quicken and QuickBooks. And anyway, so that's kind of where it started. And then with Dodd-Frank, it really clarified the data ownership question and the consumer rights question about, they should be able to get access to their data digitally. And then that's kind of the base of the sticky. And now as we've moved forward into standardization with our, for example, the work of the industry, there's over 200 members of FTX. There's over 22 million consumers that are accessing their data through FTX-enabled connections. And, there's, as with anything, there are a number of hard points as the industry evolves. And we as an industry have successfully worked through these together for decades, and we will continue to work through them for a long time. So really, if you think about data aggregation has enabled PFM access, business support of their finances by getting their bank data in, obviously ACH payments, but also, we pioneered credit decisioning and all the cool stuff that has come as a result of cash flow underwriting and verification of income, asset, employment, and other cool innovations with open banking, and the number of use cases just continue to expand.
Right, that's interesting. So how is this consumer permission data in particular fueling innovations in fintech and banks? Or in other words, how is this data guiding new services and offerings from these institutions?
Yeah, so if you think about it, the data has been used by industry. Let's take lending, for example. The data has been used for underwriting for decades, right? You bring a statement to the bank, or you upload a PDF statement to the bank. Your bank data has been used for underwriting for decades. The only difference now is that it's digital. That's it. And so, the simplification and the ease of ingesting or delivering that or permissioning that data to flow into a lender has reduced the time to underwrite and the time to close because of the digital availability. It's also reduced error rates. So anytime you're having to take a piece of paper and translate that, into a computer, you're introducing risk. And so what we've done with credit decisioning, specifically, one of the use cases of open banking is we have, reduced the the failure rate and improved by shortening the time for a lender to underwrite a loan, because that data that's been given by the consumer is digital.
That's interesting. So is there a correlation between how institutions are using this technological advancement to move from paper transaction to digital transaction? Is there any concerns about verification or trust in the technology for either the banks or the consumers?
Well, I think, you think about the delivery of statements, how that's been, right? It's been delivered through the mail in a mailbox that's typically not locked. And, the ability to just kind of take somebody's mail or use it. I mean, it's when we talk about the security, it's so much more secure today to get the data digitally. You're authenticating, username, password, multi-factor authentication. We're also providing, proof of the account owner, right? That this is your account in addition to the data itself. And so it's far more accurate. It's far more secure than the old way of doing it.
Right. That's interesting. So in the conversation we've had with financial institutions and fintechs previously, we have noticed that having access to the right consumer data often results in a better user experience, but this data isn't always accessible or readily available right away. What are your thoughts on this disconnect?
When you say not available right away, what do you mean?
I mean, it takes a while for the institutions to process the data, the consumer data, before they can use it to get insights or do their financial functioning.
Yeah, I mean, obviously, with the work of digitization across the entire ecosystem, it's all about removing that friction, right?
Right.
So there are some processes that are still kind of stuck in legacy mode. But those that are not stuck in legacy mode, that have been fully digitized, I mean, the user experience is significantly better. And so, one of the things, one of our partners is Quicken Loans. And, when we started with Quicken Loans back 4 years ago, right, the problem statement was, our time to close or time to underwrite is 10 days. How do we get that down to 10 minutes? And so that process of taking that long, all the stuff that has to happen to get to a decision and condensing it down to 10 minutes, that's really, from where we started to where we are today, it's significantly better. And we'll just continue to see, the time for these processes to condense down to even seconds. That's where things are going.
So have you seen any other adopters of this consumer payment permission data technology, or is there any other factors? Like in your previous example, you were mentioning reducing the number of days from 10 days to a matter of minutes or seconds, correct? Is there any other factors that maybe different companies are relying on for consumer permission data?
Yeah, I mean, what's interesting today is open banking is the next iteration of data aggregation. But today we have, there are 3 additional segments that are all converging at the same time. So digital identity, consumer data rights, so really the regulation around 1033, and cryptocurrency and blockchain technologies. All 4 of these galaxies have been evolving separately for 20 plus years. And what's happened is that their vectors are all turning together all at the same time. And so, open banking is one thing, right? But when you kind of take a step back and you look at all of these things that are happening simultaneously, the analogy I like to use is the the visualizations of the Andromeda and Milky Way galaxy coming together in 1 billion years. Imagine all of the planetary collisions and things that are going to happen, and I think we're going to see that in the next, within the next 2 to 3 years, with all four of these technical galaxies all coming together, and it's all in this realm of, you know, digitization, the realm of digital credentials, the realm of consumer data rights, data privacy, right to be forgotten, and open banking, open finance, and data access. And so you take a step back, and the amount of innovation that's coming is going to blow everybody away. It's super exciting.
Do you see any damage concerns about this convergence, from this convergence? I know we're still like years behind it, but are there any indications of whether, because right now all we're hearing is positive things about how it's going to change technology, it's going to change the way that we do businesses in the world, but is there any risk factors involved?
There's always risk, and it's never perfect, right?
Yeah.
So and that's really, you know, our job as industry, it's jobs as regulators and lawmakers to really try to make sure that we're always keeping the consumer at the middle.
Right.
It's all about them. It's about you, you know, your control over your data. Is your data being used for purposes that you actually want it to be used for? And do you consent for that use? And so I think it's, you know, it's important for us to know that nothing's ever going to be perfect, right? But it's always going to move in the direction of goodness, because of the way that things are being built. An example, for example, is, you know, Tomo Credit. One of the problems that they've been trying to solve is the thin young, or the kind of the new to credit folks, people that are coming from other countries, and they're making great money, but, you know, they don't have a bureau score. And so they're onboarding with mechanisms like open banking data that's permissioned by the consumer. And then they're reporting the positive behavior to the bureau so that you can help you build credit. And so, you know, Brex and Lendio are doing similar things for small to medium businesses. You know, we can talk about buy now, pay later, which is also a cool topic, but the amount of innovation, the amount of inclusion that's happening in just the US alone, let alone globally, is going to be mind-blowing with the convergence of all four of these techs.
It is an interesting time. It is definitely. So it is anticipated that open API standards will continue to promote innovations and international collaborations while improving the user consent and security. Can you tell us some more details about it, and how would this come true?
So, you know, obviously we've been involved from day one with the creation of the financial data exchange. And the purpose of the financial data exchange has been to create a common standard, for an interoperable common standard for consumer permission data access, you know, to the banks and financial institutions. And so I think, you know, the idea that an API standard, that's a piece of the puzzle. Consent management is a piece of the puzzle. You know, consumer data rights. Once data has been consented, how do you use it, and how does the consumer know that that data is being used for that purpose? Those are the problems that we're trying to solve from an industry standards perspective. And there's two approaches, right? There's a kind of a government mandated tops-down approach, which can work to kind of bring a coalescence very quickly. But then you're not left with the fundamental ability to evolve, right?
Sure.
And so in the US, we've been maybe a little slower to kind of get to a common standard, but FTX has tremendous momentum. And not only does it have momentum to change and give consumers access to their data, but we have this amazing underlying industry-driven organization that's iterating. It's a live document, a live spec. There are people working on it every single day, and that's the power of industry collaboration around an interoperable standard.
Thank you so much. It was really good. Well, thank you for joining us and sharing your expert insight on the topic of data access. It was great talking to you, Nick. Have a great day ahead.
Thank you.